Morning.
Good morning.
It's good to be here with everybody. Again, my name is Crystal Budd, and I'm with Health Plans for Less. And I'm going to be talking to you this morning about life insurance and how important that can be for your future, your protecting your family, and perhaps even creating a legacy for your family. So this morning I've passed out to you some papers. If you'd like to take a look at those with me, you can. There's lots of different, I want to talk about the different types of insurance. Some of you probably are familiar with this information and some of you may not be, so I think it's good to just review it. It'll get you thinking about what you currently have and are you properly insured. So there's different types of insurance. They call it term insurance and permanent insurance. And if you look at my little graph that on the first, on page 1, you'll see where term insurance is essentially, when you're purchasing that, it's for a set period of time. It might be, usually the minimum is 10 years, it might be all the way up to 30. Some companies actually have gone up to 35 years, but that's the max that you can get. As you get older, of course, you may not even be able to get 30 years. So purchasing that insurance is dependent upon your age and how many years you can get. Okay? So, because if you're in your 70s, maybe you can only get a 15-year policy. You might not be able to get a 30-year policy. It may not be available to you. So term insurance, again, when you're purchasing that, it's typically your most affordable. It doesn't cover you to the end of your life because it's a period of time. It's a term. They have term policies that have what we call return of premium, where you can actually purchase the policy, and if you live to the end of the term, you can get all your money back. So it's kind of like a savings program. But if you should pass, then of course your family gets that money, the life insurance money. So those were very, very popular probably 15 years ago. Sold tons of return of premium policies. And that's actually some policies that we owe, and I look at those as additional savings accounts. If we live to the term, we get all our money back. That's a pretty good deal. But we've had that protection all along. It costs a little more than just a straight term, because normally what happens, insurance companies for term policies typically only pay out about 3% of those policies. So it's not the best investment, but when you think about, it's a great investment if you die for your family, because it gives you protection and it can give you money that's tax-free to your estate. And that, to me, it's difficult, when you think about your tax bracket when you're trying to plan for your future, and life insurance is a terrific vehicle to plan for your future. And those products are more permanent products. And these would be things that are there's two different types, the universal life and your whole life policies. And those, because they take you to the end of your life, which they say, they usually say 120 years, which is beyond our life expectancy, but that's what they usually run the illustration on, is 120 years. So we look at that and we say, if I put in a certain amount of money, then it's going to create what they call a cash value. And over the course of time, it may take on the average about 12 to 15 years where the money you've put in the policy is now beginning to pay for itself. It becomes free to you, okay? Because there's cash in the policy, and now you own the policy, and every penny you've put in is now there, cash available to you. So I'm a strong believer, and I think it's good to have multiple investment options. I think it's really important to diversify yourself. Just like if you're going to invest in the market, you should diversify yourself. So in the life insurance industry, you should diversify yourself. I have a term policy with return of premium. I have a universal life policy. Okay, that policy is intended to take me to the end of my life. The blessing is, if I die prematurely, Ron, my family's protected, and he's going to get whatever the death benefit is, tax-free, right? If you don't have that, then you're basically saying, I'm trusting that either someone else in the family is going to take care of the problem, or you're not concerned about it. It's not important to you. which as a man, I implore you as a woman, and if you are the breadwinner in your family, then you need to be serious about this if you care about your family. And I don't say that to be harsh. I say that because it's the reality. It's your responsibility as a man to take care of your family. And like I said, you can, our goal may be, when I look at my debt structure, young people, when you're trying to determine how much insurance you should have, you should be looking at, do I have a mortgage? Do I have college debt? Do I have a lot of credit card debt? What is it going to take for me if I die and my spouse has to take care of the family? How much income is it going to take before they might be able to recover, or get a job, or do what they need to do? And they say it's 7 to 10 times what you're earning, minimally. That's what you should, as a rule of thumb. So for a young person, they might think, I don't have a mortgage, I only have school debt. Maybe they only need a $100,000 term policy. They just got married. Okay, just get that. Might cost them $15 a month. It's not a big deal. But at least now if something happens, you can take care of that debt. The next is, are you buying a house? What kind of mortgage? Maybe you have a $500,000 mortgage. You should be looking at protecting that. If you have a lot of debt from other things, you should be looking at that. If you start a business, we also have buy-sell insurance because we have a partner in our business. So really important, if something happens to Ron or our other business partner, that they can buy each other out. It's not left up to the spouses to figure it out if they don't want to figure it out. Because most spouses don't want to step in your shoes. And John, does your wife want to become a painter? No, she doesn't want to paint houses. I wouldn't either. So if you have these buy-sell agreements in place, then if this happens, you can buy the spouse out, give them whatever the value is of the policy, they can walk away and you can continue on in the business as the other partner. So that's a really important part. You can have operating expense policies if you lose a key man in your business. If you've trained somebody and they're valuable to you and it would be very difficult to replace them, you can get a policy on that individual so that it buys you time to find somebody, train somebody, pay the bills, not feel pressured. What am I going to do? We tend to make poor decisions when we're not able to give enough thought to them, right? So I really encourage you to think about that. So back to the grid that I gave you. You'll see where term insurance is for, again, a period of years. Maybe you only want 20 years. My advice is always, you're never going to be as young and as healthy as you are today. Would you agree with that?
Yes. Yeah.
Okay, so buy the longest term policy you can buy. It's more expensive, but never buy 10 years. It's a waste of money. Unless you only have, that's all you can afford, then of course it's better than nothing. It all comes down to what you can afford. But I'm always like, if you can afford a 30-year policy, go with the maximum. Because we don't know what tomorrow will bring, and then they'll say you're uninsurable. And you wish you had, and you can't. So that's really important. So term, again, specific needs for a period of time. So moving on to universal life and whole life, you'll see it creates wealth, it can create income protection, and tax-deferred wealth accumulation. So for me, for example, I have what they call an index universal life policy. Bought it 15 years ago, maybe longer. I have a cash value that's growing in that policy. Now, basically, the policy's free to me, but I still have all that coverage. Isn't that great? The end result is I don't want to die prematurely, so he gets the money. Not really. I mean, I'd like to live long. I mean, that's just a benefit. But the goal is I want to live long. So what I decided a long time ago, I thought I could put my retirement IRA money into this policy instead of putting it in an IRA. The reason I rationalized doing that is I thought if I put it in an IRA, it's just tax deferred. And I can put my $5,000 in a year, and it'll grow to something, but it's subject to market conditions, gains and losses. That money will eventually become taxable, which we don't know what the tax environment's going to be when it becomes taxable. Could be worse, could be better. I don't know. So there's a risk there, right? Whereas I know if I put $5,000 a year into my life policy, if I died in the first year, I've paid $5,000 and he got $400. Is that a good investment?
Hell yeah.
Tax-free. Oh, that's way better than an IRA, because they would have taxed me at least 50% if I died on that 5,000, right? So now I put money in again the second year. I've got 10 grand into it. Still got a $400,000 life insurance policy. I'm building my cash value. You see, so instead of me putting in my IRA, I made that decision because I couldn't do both 15 years ago. So I decided to put that money into a life policy. And eventually, if I live at say 65 or between 65 and 70, what I'm going to do is begin to take income out of that. I can borrow against the cash value, take tax-free income. What happens is it becomes a wash loan, meaning that I'm earning interest on my money, but I'm paying interest because I'm taking out the loan. It's the only legal way to take tax-free income out of anything is through life insurance. Nothing else is tax-free. So that's my goal. If I can add an additional $1,000 a month of tax-free income, now that becomes worth what? If my tax bracket is 50% or whatever it is, I've just really, it would have taken me $1,500 to get that $1,000, right? So when you think of that, I remember meeting with a young man. He was 22 years old, not married, just getting started in his career. Smart young man. And I was just getting started in life insurance, and I thought, okay, I'll meet with this kid. He's not going to buy anything. He has no reason to. He's 22 and he's just not even married, you know. But he said to me, and I really hardly even knew what I was doing. I was just getting started. And I met with him, and he bought a policy from me, $200 a month. That was a lot for a 22-year-old. But he said to me, he goes, you know, my dad, when he retired, he worked all his life, and he had nothing. And I don't want to end up like my dad. And I said, good for you. He got it. I explained it to him, and there's a rare 22-year-old that would get the concept of, you know, life insurance can be sophisticated. It can do a lot of things for you. And he got it. And I thought, wow. And when I brought the paperwork in, the guy that was training me, he goes, I can't believe you sold this policy. I couldn't either. But he got it. He was a very wise young man. So life insurance, like I said, for me, is protection. It's creating lifetime income, tax-free. That's the goal that I have. Another type of policy, that's the term policy that I've sold some of you, is where it has living benefits. I call them where you can access money out of a policy if you get cancer, heart attack, stroke. You can't do 2 daily living activities. I call it like the poor man's long-term care policy. Because it's not long-term care. It's not. But it has a trigger that allows you to access money out of the policy if something like that should occur, where you can't do 2 daily living activities. And it's very affordable. It's pennies on the dollar more than a traditional term. I don't even sell term unless it's for business anymore. I always sell that policy because for that little extra, I know that family's protected way better than if I just offered them a straight term policy. I know that. Seen it, experienced it. It's proved out because I've had people that have made claims. So we've made a claim on that policy. Again, everything that I'm telling you, I own. I'm not just telling you because I want to sell it to you. I'm telling you because I believe in it. And I want you to be protected. You know, I know that when I put my hand on the pillow, if I don't wake up, my family's protected. Okay. Another thing about permanent insurance is if you have a lot of assets, some of you own real estate, when you, depending upon how you set it up, and hopefully you'll talk to Carla about that because she's a wizard at not leaving a tip for the IRS, but paying your fair share. So if you want to preserve your assets, you can use life insurance to pay your inheritance taxes so that it's not a burden and nothing has to be sold off. So life insurance really can create wealth. If you don't have a lot and you want to purchase a life policy and leave something for legacy for your family and you were never able to save, you can do it by buying a life insurance policy and actually leaving a legacy for your family, your grandchildren. It's a way to do that. So it's pretty remarkable, really. It's one of the only investments that I know of that truly performs. You know, there's none of this market adjustment stuff going on that everybody likes to say it's an adjustment, but it's really you take a loss is what it really is. Just a nice way of saying that. It's a less painful way of experiencing that, right? So we know that term insurance is less costly than permanent insurance, costs more money. So you have to be willing to spend more money to get that protection for a lifetime. Premiums are usually fixed on term and whole life. They can be flexible on the universal life. You know, you can change that. You can put in more, put in less, typically. Again, we talked about the beneficiaries. What's paid out to them is typically tax-free money. Now, I have to have a disclaimer here. I'm not an accountant or CPA. They always advise you to check with your CPA or accountant. But typically, life insurance has always been tax-free. But there are circumstances, if you call MECA policy, meaning it becomes a mutual endowment fund, then it becomes a taxable policy. So there are exceptions. So you have to be careful about how much money is put into the policy. You can't overfund a policy, because if you do, you lose your tax-free benefit. So you have to be aware of that. Some policies have investment options in them. Typically, the stuff that I sell does not. I'm not a variable life insurance policy. They're tied to the market. So I'm not, that's not the products that I represent. There are people that will offer those to you. And again, if you purchase that, it's tied to the market and it can fluctuate. Your cash value can go up and down. So I tend to be a little more conservative, take a little more conservative approach. And I'm not saying that's good or bad. It's just my choice, my personal choice, okay? Let's see. I think one of the most important things is to consider, if you have a life-changing event, it should be a trigger for you to at least go through, do I have enough life insurance? Maybe I even have too much. Sometimes you can say, I met with a senior couple and they were like, you know, we have this policy, it's super expensive, this is our budget, we're having a hard time paying it, we don't feel like we need to leave this money to our children, we need the money to live on. You know, you have to decide. So I said, well, what life insurance do you think you need? I really just need it for burial purposes. I want $20,000 to bury me. So we were able to, before we cancel anything, we were able to apply for that. Once they were approved, then they were able to say, okay, I'm comfortable letting this go. Save them, $400 a month, which was huge for their budget because they were on a fixed income. Now, was the family great? And I said to them, you should talk to the family first and see if they want to pay the policy. Because sometimes the children can step in and pay that premium because the asset is, maybe it's $500,000 and it's $400 a month. And you know, what if they had to pay it for 5 years? That's a great investment, right? I mean, if you look at the numbers, that's the thing about all finances, it's just numbers. And if you can make sense of it, if it's good, then you should do it. If it's not good, then don't do it. But that's what life insurance is. So I think, have I run out of time? I probably.
Yeah, you're fine.
Am I okay? Okay.
Yeah, you got another 59 seconds.
59 seconds, that was good. So if you look at the paper that I gave you, I encourage you to read through this. It just gets you thinking about the types of insurance that are available, how much do you need, and again, it reiterates you should have at least 7 to 10 times of what your salary is. And for people that are single, you know, maybe term insurance isn't the answer. Maybe putting in a couple $100s in a policy that creates cash value. Because let me tell you something. My mom lives on Social Security. She has a small pension. And if she had an extra $100 a month, an extra $300 a month, an extra $1,000 a month, that could make a big difference in her life. You know, it doesn't sound like a lot of money, but when you are on a very tight budget, it matters. And because I do Medicare, I get to see people's lives change. I have clients for years. So first they start out 65, it's like, you know, no problem, I can afford this. By the time they hit 75, their budget is strained because maybe they can't pay the premium for a PPO, it's $400 a month. So we move them over to an HMO to save $400 a month because there's no cost. But life situations change, and if my mom could have that extra little bit every month, if she had done a policy like this and had more income coming in, it would have increased her life. would have maybe given her an opportunity to travel more or do something else. So just food for thought.
Great.
I appreciate the time. Thank you very much. And if I can be of service to you, your family, your friends, it's always an honor to do that, because I'm a firm believer in, protecting your loved ones. So thank you very much.